Peter Eliades with you. This is Stock Market Cycles YouTube update. Special update for YouTube. Sometimes we do a simulcast with our subscribers, but our subscribers are right up to date. We are going to bring you right up to date on our cycle projections. This is being recorded on Thursday evening, September 8th, 2022. Very, very exciting time in the market. Let me remind you of our last two updates. We did an update on this date. There are vertical lines here, vertical dashed lines, okay? We did one on June 13th and said we're really close to a market bottom, and here we were. Here was the update, here was the market bottom. Everyone else, not everyone else, but so many people were bearish down there, okay? And we said no. We used the word BS. If my mother were around, she would have said, bad boy. But mom's not around. God bless her. Anyway, this was the low right here. And we told you prepare for a surprising rally lasting several weeks and perhaps a couple of months. Well, guess when we did our next update? Here's the line right here, okay? August 15th, actually, the 15th was a market day. We did it on the weekend preceding that. I believe the 15th was a Monday. We did it over the weekend right here, saying we gave you the numbers to look at. I've got them written down here. We said a target projection between 42.80, where we closed that day, to 43.52. The final high on this day, intraday, was 43.25.28. Okay, that was on August 16th. All right, let's look at a few things here. This rally came up. We've spoken to you before about speed resistance lines. They're wonderful tools invented by Edson Gould, who is truly one of the great market master forecasters. Been dead for a few decades now, but wonderful market forecaster who did fabulous technical work, okay? And speed resistance lines are easily calculated. A lot of the software that you get from the purveyors of software and data will allow you to do speed resistance lines. I'll show you quickly how to do it. This is the Christmas low back here. This is, by the way, a closing price chart. You can do it on closing prices, intraday bar charts, whatever. Okay, this happens to be a closing price chart. This was the closing low back in December, 24th of December of 2018. This was the all-time high, January 3rd of this year. Okay, right here. There we are, 47.96.56. So what you do is calculate the distance from the low close to the high close and split it into three. And that's done right here. Here's the first third down. Here's the second third down. And here's all the way down going back to that low. Well, look what happened. We came down to the speed resistance line after the January high, had a nice rally. Okay, this rally came into, I guess this was the beginning of May, okay? Then we broke it fairly decisively, coming down to the low in mid-May. We rallied back up to it again, almost exactly up to it, had an even larger decline. And that's the decline that led to the closing low, okay? June 16th closing low. Then we had a rally, and guess where the rally stopped? I mean, couldn't have been any closer to that same speed resistance line. Okay, these are things I love to do. They're technical things in the market. But what we do at Stock Market Cycles, and I use the editorial we, this is my service, okay? What we do at Stock Market Cycles is price projections. And I like to think that we do them better than anyone. I think this was one example that we left you with last time when we gave you the upside projection right here. To the T, the market stopped there and started coming down. So where are we now? What kind of projections do you have now, Eliades? Well, I'm going to show you that, and it's pretty exciting. By the way, uh, I tell this to my subscribers too. I don't know how long this update's going to be, but it's going to be pretty in depth because I know a lot of you out there like in depth analyses, okay? And that's what we're going to do with the cycle projections. If it's too long for you, you know what you can do on YouTube? You go to the settings, it's right there on the bottom of the screen, the little gear shift thing, the gears, and you click on settings and go to speed. And you can adjust the speed of the playback. Well, I forget what the speeds are, but 1.25, 1.5, 1.75, 2 to 1. There may even be one faster than that. What that means is you can play back the long YouTubes that you don't want to sit there and watch at twice the speed. So if this is a 20-minute update, you'll be able to see it in 10 minutes. Not only see it, but hear it too. It's not a Donald Duck thing. No, it doesn't do that. It's computerized so well that for the most part, you can understand exactly what I'm saying, except I speak very, very fast. If you're going to watch a 20-minute update in 10 minutes, you know that the vocal is going to be fast. If you come to a point you say, well, what did he say? You just go back and you click on it and you go back to regular speed. That way you can review these updates in a very quick fashion and stop where you want to stop to get the details, okay? All right, that much having been said, let's do some work here. Show you the charts that I showed my subscribers today, okay? And by the way, if you want to subscribe and if you're involved with the market at all, you really should. I think the service is priceless and the prices are quite reasonable, okay? There'll be a link at the bottom of the video that you can go to. You can get a free trial for 14 days. And boy, might this be an exciting 14 days to get a free trial for. Go to the link at the bottom of the video and sign up for that, okay? In the meantime, a couple of things to show you here. This brownish moving average is my favorite short-term trend indicator, okay? It's an exponential, it's the equivalent of an exponential 10-day moving average because this is a 65-minute chart and there are exactly 6 bars in a 65-minute chart in a cash day, okay? Because there are 390 minutes. Pacific time, it goes from 6:30 until 1:15, okay? So there are 6 exact bars in a market day. So a 10-day exponential moving average would be how many bars? 60. Watch this. Edit exponential moving average. There it is, 60. So you're looking at, on an hourly chart, 65 minutes, the equivalent of a exponential 10-day moving average. They're not perfect. Sometimes you get a little bit above them. As you can see back here where my head's in the way, right here, got a little bit above it. 1 bar closed above it and then down again, okay? So we've come up twice to it now in the past several hours and stopped at it. Are we going to stop here? Well, we don't know for sure, but let's look at the projection. This is the equivalent on our daily chart, projection charts, of the shortest offset that we do on the dailies, 1.75 to 2, okay? Here it is right here, and here's the projection box, the green box, and as you can see, we got well into it. So once you reach a projection, you go to the next longer offset. Let's do that. This is the equivalent of a 3.5 to 4 day offset, nominal 10-day projection, okay? And look at this. The box called for a move to between 4,009.82 and 4,050.42. So we don't know for sure, obviously, whether this is all we're going to see, but we got into the projection window. 4,982, the high for this bar was 4,010.50, just into the projection window. Once you reach that projection, you go to the next longer one. This is the equivalent of 7 to 8 days on the offset, okay? And as you can see, no higher projections have been given. When all projections in a direction are met and no higher ones are given, that's where you look for a market turn to occur. And that's why I'm doing this update. Now, mind you, we showed on the projections that it could get up to here somewhere. I forgot what the number was, but we just gave it to you. So it could get up to here. The important thing is that by the end of the day, tomorrow, and that's Friday, September 9th, we can be anywhere within this purview right here if we stay up here, and we will not generate a higher projection, okay? By the end of the day, which would be a bar right here, if we're above this line, then we have indeed generated higher projections. And that would be the line right now is around 4,045. So if the midpoint of the bar at the end of the day is above 4,045, we're talking a different ball game. We still have higher to go. I'm thinking that might not happen. I'm thinking that there's going to be resistance here, and I'm thinking we're going to turn around to the downside. There are several reasons for that, okay? Let me give you some reasons right now. And here's where it gets exciting. Okay, we're still on the hourly chart now. Here's the high of August 16th right here. Look what's happened. We broke below the equivalent offset. This is on a daily chart. This would be the equivalent of 24.2 to 27.6. We kind of went below it, played around with it, but right in here, we broke convincingly below it and generated this projection 35.1160 to 36.7177. Now, only two things can happen once you get a confirmed projection. And this one is confirmed because it's below both the offset lines, okay? That's not the only test. I shouldn't put it that way. Let's show you the web chart. You need to be below the continuum. And the continuum is the complete differential move when you move the offset lines over. Let me give you an example. See the red line? That's the shorter of the two. If you start slowly moving the red line over towards the blue one, all the territory covered in that move would be the continuum. And you need to get below the full continuum for a downside projection, above the full continuum for an upside projection. So we have this downside projection that was generated here, okay? We got completely below the continuum. This initial move here just missed. We went up again, and now we've come down outside the continuum on the downside, generated this downside projection. Why is that important? I'll tell you why. So I've drawn a little rectangle around the projection, this rectangle right here, because I'm going to go to the next longer offset, and this projection is going to disappear, but the rectangle is here to remind us what it is, okay? So this completely overlaps the downside projection. Let's go to the next longer offset. This is the equivalent of 48.4 to 55.3 offset on the daily chart, okay? Let me move this over a little bit. And by the way, while we're over here looking at this, this was a big projection window, but this was the window that gave us this top back here, okay? Came right up almost into the middle of the window. Okay, let's get into the current time zone. Here is the projection that's been given and confirmed. 24.2 offset to 27.6. Okay, I've gone a step back here because this is important. This fabulous software that was written for us by Stefan Scheuermann, a nice young German man who lives in Dubai now. If you're watching this, Stefan, I'm giving you credit because you deserve it. Does wonderful things. It not only gives you the projections, but you say, oh, big deal, Elides. I can put things up on the screen, show them to you, whatever, make numbers up and show you boxes too. How do I know how accurate it's been? Well, it's designed to show you how accurate it's been, okay? So here we go. This goes back a year. You can go back a year, 5 years, 10 years, whatever. Over the past year, downside projections with this offset of 145.2 to 165.6 since October 15th of 2021, there have been 5 downside projections. 4 of them have been met. 80% success rate. The same thing with upside projections. 4 out of 5 were met. Now, you say, well, that's not statistically significant. Only 5 times. It's going to have to do for now, okay? 4 out of 5 is pretty spectacular for market calls. And The nice thing about the software is it gives you the ability to go back and look. It gives you more confidence if you see that 80% of the time when this offset has been used to generate a projection, it's been reached. Okay? And so we have this downside projection. Let's follow through again like we started to do. Here's the rectangle drawn around the projection. Here's the next longer offset. You can see right now that if we get into this offset over the next several days, even the next week or two, okay? This is the 8th today right here. Here's the 15th right now, a week from now, and here's almost the 22nd out here somewhere. But if we get down to this projection window, we're going to cross below these offsets down here. And once that happens, let me give you a rough idea as to where the next projection might be. Simply go to this high. We take off the snap values here. We don't want that. We want freedom of movement. We come down here and say, okay, let's assume we're going to cross in this territory somewhere below these offset lines. What kind of projection will that give? Well, here's the higher side, here's the lower side, here's somewhere in between, around here somewhere. Projection has not been given. This is all potential. This is possibilities. But if it is given, look what it's going to be given to. This line down here says 330167. Now, if we get down there, let me draw a little rectangle around it. This is how you put this whole thing together. It's incredible. Okay, this is a box down here. And again, this is not a projection that's been given. It's a projection that would very well be given should we come down into this projection window, which has been given, has been confirmed, and has had an 80% success rate over the past year. You would get a projection down to around here. Why is that important? Let's remember this area right here, okay? It's, let's say, approximately between 32, it's around the 3,300 level, okay? Give or take, let's say 100, 200 S&P points. Let's now go to the daily chart. Here's the daily chart. This is the 2.5-year offset, equivalent of 100 to 110 weeks. And here's the 3,200 level on the S&P right around here. Okay? So what happens if we get down there? Well, if we get down here and go below both of these lines, okay? Let me show you the continuum on this. Here it is, and his 3,280 right around here somewhere. We get down there and break below this lower end of the continuum for the equivalent of the 2-year offset on this index. And now let's take a look at what we might be looking at projection-wise. For this projection, you go back to the all-time high. Whenever you do projections, you go to the high. If you're doing a downside, you go to the highest high since the last crossing. Well, the highest high since the last crossing way back here has been the all-time high, okay? And here it is right here. This is the all-time high, January 3rd or 4th of 22. And now we want to bring the cursor down and assume we come into the midpoint of this projection and break below both of these offset lines, okay? And it's important where we cross. We don't know where we're going to cross, but this is possibilities and what ifs, okay? Let's say we cross around here somewhere. This would be the projection. Look at this. Just under the 2,000 level. So let's round it off and call it 2,000. We are now at 4,006, my friends. Now, when a projection is given, that doesn't mean you're going to reach it in the next day or 2 or 5 or 10. It's a nominal 4-year projection. So you can argue if you halfway up is 1 year, full way up is 2, 3, and 4. So you can argue it won't be overdue until a year from now. But once projections are given, they can be met at any time. If you get a crash-like situation, you can meet it in a week or 2. That's what happened in 1987, okay? So all we know is that if we break below this area, okay, we have pretty good indications that that might well happen now we're going to be getting projections down around the 2000 level on the S&P. Okay. So that's why this update is so important. That's why these levels are so important. This projection is confirmed. This one is not the gray box here. But if we get down to this area, this one will almost surely be confirmed. If we get down into this window, especially the lower half, this projection will be generated. That's where we stand, folks, okay? That's how important current market action is. And that's all I have to say. This is a critically important time in the market. What do we look for if you say, well, I want to be bullish? I'm really bullish, Elias. I think the Federal Reserve is going to do this and it's going to do that. So is there some kind of a hope that your things won't come to be? There's nothing 100% in the market, my friends. These are not 100% success projections, okay? So what would you look for if you don't want this to happen? Well, number one, you'd want to get above the exponential 10-day moving average. Number two, you'd want to get above the 50-day moving average. And perhaps more importantly, let's bring up the 200-day moving average. Oh, look at this. That's exactly where we stopped, okay? On the way up. Almost exactly on August 16th at the 200-day, the declining 200-day MA. So if you have a continuation of this tiny rally here, get up to the 200-day and start breaking above that, then you're talking a different ballgame. In my book, is that going to happen? No. But there's no 100% in the market. So if you want to be a bull, that's what you look for. You want to see something like that happen. Because there are people that are talking about, oh, we're ready to go to new highs, and oh, this is what a great opportunity for buying right here. We'll see. Okay, I'm not going to show you anything else. I usually look at the NDX and look at maybe Bitcoin or whatever. I'm looking at the S&P right now because that represents a big chunk of the market, and that's what's critically important at this time in the market. And as you can see, there is a potential path to significantly lower prices in the S&P. And with that, I'll say thanks for watching. Keep your eye on the notifications for YouTube. If you're not a subscriber, please subscribe. We can use subscribers. The more we have, the more exposure we can give to the projections. And by the way, I would really appreciate a thumbs up if you want to do that. That would be helpful too, to gain us recognition, because I don't think anyone has called the market better than these projections, especially over the past several months. Thanks for watching. We'll talk to you soon.